the change, if you like, in the situation where we had declining interest rates without inflation, in the sense of the consumer prices really being stimulated, that has very, very definitely changed. And there's still a lot of inflation in the works, basically driven by the US government's enormous budget deficit, which I think in this current fiscal year ending end September will probably be in the region of sort of 3.5 trillion. I mean, that is undermining the purchasing power of the dollar, and the foreigners know it. The foreigners see that the US government is in a debt trap, and so are they going to play ball lending money to the US government? I think not. I mean, so interest rates, bond yields in particular, will rise. And this is something which nobody at the moment is really expecting. There are a few who begin to see it, but the majority of investment managers assume that the Fed is going to push interest rates lower. Their assumption is the Fed is actually in control of interest rates. I'd hate to disabuse them of the fact, but they're not.